I am Cassie Stanley with NID Housing Counseling Agency. We are a HUD-approved housing counseling agency, and I am a certified counselor. I'm here to talk to you today about don't wait until it's too late to save your home. So the one important thing about NID Housing Counseling Agency in that don't wait until it's too late is that we offer free services to help you during this process of saving your real estate. Well, what could be some of the causes that you would need to contact a housing counseling agency during this season? Did your property value decline? Was it a situation beyond your control? Did you have an increased mortgage payment, or you had one of those adjustable rate mortgages? Well, you could have had a loss of income or a change in your job. Were you forced to go into bankruptcy? Did you receive a foreclosure letter? And so when we talk about the things that could be causes for you to have these difficulties, we know that one of the situations beyond your control and all of our control was the COVID-19 that happened in 2020, and it affected a loss of income and your job. And so we're just trying to come out of that season now. And as a result, we're faced with a lot of difficulties at this particular time. So when you're faced with this crisis and not knowing what to do because you don't have the money to get you out of the trouble that you're in, well, the majority of the homeowners don't have those funds because with the COVID-19, nobody worked. They were able to get some unemployment compensation. Some of them were able to go back to their jobs, and some was not. Some of them even had to take a job making less money. And so we know that would have a great impact on your ability to make your mortgage payments during that time. Well, because of the crisis that happened, the lenders and our investors created a forbearance plan. And what does that mean to you? It means that during the COVID or whatever time this situation happened, that you were entered into a forbearance plan with your mortgage company. At that particular time, the mortgage companies should have reached out to you, or you may have reached out to them, and they were offering you the plan. Now, what does that mean? Forbear. It means that they're going to suspend or reduce your mortgage payment for a specific period of time. So they did that starting in March, April 2020. Well, initially they thought this may be a short process, maybe 3 months, 6 months. But you know what? It ended up being almost 2 years. And so now we're trying to come out of that slump that we were in, and the lenders have to make some serious decisions as to how are they going to continue to help the homeowners remain in their properties. Well, one of the things that happens when you do contact the lender, they may say, well, contact a HUD-approved housing counseling agency. Okay, but what does that mean? Contact a HUD-approved housing counseling agency. It means that because of the free service, we are very aware of the programs and or guidelines in place for the homeowner. And so we're here to advocate on your behalf with the lender. So let's talk about that process that happened maybe March or April of 2020. The mortgage lender contacted you and said, we understand the crisis that we're in, and so we're willing to forbear your payment. So that means they're just going to take your payment and put it on the back end. And so for a period of time, they're not going to be trying to collect your mortgage payment. You will not incur any late fees, and they're not going to report it to the credit bureau. So what happens after that? What happens after that period ends? And that's where we are now. We're in the season where the forbearances are ending, and some homeowners may be 1 year or 2 years in arrears. Now we know that you don't hardly have that type of money to reinstate your loan. But we also know that you don't want to lose your property. So that means that the lenders need to put a program in place to help the homeowners to become current. Well, could you have extended your forbearance? If you went in, how long can you extend your forbearance plan until you're back able to work again? And then how long can you extend it if you still have sickness or other things that are happening, but it all started from the COVID-19? Well, it depends on the investor. FHA will give you up to 2 years, and VA and some of the other lenders will continue to extend that forbearance plan to you. Now, there were homeowners who didn't have to take advantage of the plan, but you know how some individuals feel. Well, if I can get a free period where I don't have to pay my mortgage, I'm not going to. Well, the flip side to that was that, did you take your mortgage payments and put them up because you could afford to pay your mortgage, but you had an option not to pay? So did you put your money up, or did you just spend it, not realizing that the day will come, and it is now, that you have to pay your mortgage? So now that the forbearance is about to end or is ending, depending on your lender, some of the things that the lender may or may not have told you is 30 days prior to the expiration of your forbearance period, you need to contact us so that we can make arrangements for the next phase. So what would be the next phase? The next phase is, how do I take all of this delinquency that I now have and become current? Well, you have several different options. And some of those options are, depending on the type of loan that you have. If you have an FHA loan, which is a Federal Housing Administration, they are the investor or the insured of your loan. However, the lender is the servicer of your loan. It could be Wells Fargo, it could be Chase, it could be Shell Point, it could be a number of different servicers. And so you're going to reach out to the servicer so that they can, and complete your application so that they can get permission from the investor. So let's go back to talk about FHA. You've missed 12 payments and or 24 payments, and that can be $20,000 and or less. So they're going to come in and offer you several different options. The first option they're going to say is, you've completed the forbearance plan, and so now can you repay it back? So how many homeowners have that type money? Because repayment means you're going to take those delinquent payments, they're going to be divided over a certain period of time, and so you're going to have to make that payment plus your current payment. So for the average homeowner who's already stressful because they couldn't make the payment, their normal payments, repayments is not an option for them. So now you can consider a different type program. How about a partial claim? What does that mean to you? That may be something you don't even understand, but your housing counseling agency understands. So a partial claim simply says, with an FHA loan, I understand you don't have $20,000. I understand you don't have $30,000 and or $10,000. And so what we're willing to do is to take this amount that you're in arrears, create a solid second non-interest bearing loan, set it aside, and then we will modify the current principal balance. Now, when we talk about the current principal balance and where you are today within that 30-day period, there were different programs created. For example, a standalone modification. That means that it stands alone by itself, and they can reduce you to the lowest interest rate and possibly change your mortgage payment. But the good thing about it was they didn't have to ask for any supporting documents. Now, how helpful is that? That you have not been working, You may have drawn unemployment, but now I have an opportunity within this window to make a decision. And so when you contact your lender, they're going to say, well, you got to make a decision today, or you got to make a decision tomorrow. But for you, that may be a little bit too much for you to say, I don't even know what to do. Well, if you have your housing counselor who can advocate on your behalf, they can direct you into this may be your best option. You don't have to provide bank statements. You don't have to provide proof of income, but you are able to make your payments again without having to go through a lot of documentation. So that would have been your best option, to go ahead and take a standalone modification. Well, now we're in a housing crisis again. And the reason we're somewhat in the crisis is we don't have inventory. And therefore, the interest rates have escalated up. And that means that if they had to recalculate your payment again with a new interest rate, your payment could be higher. But let's talk about the fact that you went 10 months, 12 months, whatever your period of time is, and you have a mortgage payment, which is a PITI. So when you went to the lender and you closed on your loan, they said, well, this is your mortgage payment. The principal is what you borrowed. The interest is what you pay on what you borrowed. And that is directed by the lender. But then you have taxes and insurance that is not controlled by the lender. And so if you have not made a payment and you know that your mortgage payment includes taxes and insurance, then that could force you into an escrow shortage, because the lender is going to pay that. Because escrow basically says 1/12 of my escrow goes into a savings account. And so when that money with the lender, and so when that payment is due annually, they can pay it on my behalf because I've already made those payments. But if you haven't paid it and the lender has to pay it, then that's going to create an escrow shortage for you. That also means that it could increase your mortgage payment. And so now you're faced with an increased mortgage payment because of your inability, or because of the program that said you don't have to pay. Well, even with a modification, they can take that escrow shortage and put it into a partial claim to give you some relief, and you don't have to pay that again. Now, the other thing that's happening is, just say you go back and you resume your payments. Well, when we didn't have inventory, because nothing was being built and people were not moving out of their properties, we had what they call an inventory shortage. And so, there was a bidding war out there for properties. And homeowners who could buy, who were still in the market to buy, they were having difficulty trying to find properties and or pay what the advertised price was. So now, because there was no inventory, your equity increased. And so now your property is worth a lot more because builders came in and decided, well, we're going to build some properties. There is no inventory for resales. This is a great opportunity for us to build some new properties. And of course, we're going to price them higher than what you would have done a year ago. And so the builders come in, and because of during the COVID, everything went up. The cost to build properties for the builders. They had to pay more money for supplies, and therefore they were increasing the prices of the properties. Now, how this is affecting you as a homeowner is that if you're in an area and the builder is building subdivisions, or, they would come in and build one house or two in the area, depending on the land that was available. But if you're in that arena and you owe $150,000 on your property, but the new house is worth $300,000, the plus for you is that increases the value of the property. But at the same time, that's going to increase your taxes because there are new properties coming in at a higher rate than previously. So how do you feel what would you think that some of the investors are thinking? You have private investors that do not have to abide by the guidelines. And so you're 24 months delinquent on your mortgage. You didn't reach out to them in a timely manner to get a workout. And now they want the money. They want you to reinstate your loan. They don't want to give you options. And so you may not have that lump sum money, but in some of the investors' eyes, this is an opportunity for me to get the property back during a foreclosure. Because if you would remember, everything shut down during the COVID. There was no foreclosures or anything, so the lenders were at a standstill. They just had a lot of delinquent payments on their books and they couldn't do anything about it. But now that that is fading out, a lot of the servicers are starting foreclosure proceedings. That's when they can foreclose on your property. The one thing that you need to know, or that you should know, Georgia is a non-judicial foreclosure state. They don't have to take you to court. The attorney will send you a 30-day letter stating, this is your 30-day notice that we're going to move forward with foreclosure proceedings if you do not reinstate your loan, or if you have not paid that amount or contacted your lender to do a workout plan or whatever you need to do. So that's why it's so critical that you don't sit back and be in denial. You know you didn't make the mortgage payment. You know that you got to work something out to keep your property. That's why you need to be contacting your lender to try to get a workout plan to prevent the foreclosure. And so in some of the investors' mindset, that I can just take this property back and sell it for a lot more than what my loan balance is because of the equity now and because there's no inventory. And so if you can resell this property for extra $125,000 or whatever, what incentive would they have to do a workout plan with you? So you have to be proactive. You have to be the aggressor. You have to be the one to make the informed decision. I am going to keep my property. I have not been in this property for 5, 10, 15, whatever number of years to just give up my property, because you know, rentals rates are double of what you're paying for your mortgage. You may think that you don't like your property, and you may think that $1,000 or $1,200 is a lot, but when you lose your property, the lowest possible rental rate is like $1,800 to $2,200 and up. And so you don't want to put yourself in that mode that you want to have to get into a rental when you have already owned your property for a certain period of time. So you need to be making sure, first of all, that you contacted a housing counseling agency. And let me say this, the lenders tell you, call us. So when you call them, the person who answers the phone is customer service. They don't know anything about your loan. They're just going to go in the computer, pull up your records, and tell you what they see. So some of the frustration that our homeowners are encountering is that maybe they did contact the lender. Maybe the lender did say, okay, we'll do a workout for you, or we'll do a modification for you. And then you call in to try to get an update, and the customer service says, we don't see that in the system. And then you're panicking because you need to talk to loss mitigation. You need to know when you call that servicer what department you need to be speaking with. Most of the times they'll send you a letter, give you a point of contact that is servicing your loan. But at this point, there are so many properties that's having to be serviced. You may be leaving messages for days. But the flip side to that is, as a housing counselor, we've been able to get through. And that's why you need to utilize the services of someone that can help you. Now, what happens if you can't get a modification? You cannot get a partial claim. You can't get a repayment. Maybe you have a conventional loan where they were going to extend the term of your loan and take your arrears and just put it on the back end. But what happens when all that fails? Well, the Department of Treasury came out with some funds to help the homeowners. And these funds are called the Housing Assistance Fund. In short for that is HAF. So when they came out with these funds, you could apply, and you can apply. That's the next step I want to say. These funds are through your state agency. So Georgia's Department of Community Affairs. However, some of the different municipalities, your Henry counties and your different municipalities did get some funds that they can help you also with your mortgage payment. They may not have those funds available to bring you current, but they could help you in the interim. And so when all else fails, you need to reach out to the Department of Community Affairs, apply for the Housing Assistance Fund. What can this money be used for? It can be used for your mortgage delinquency. It can be used for repairs. It can be used for utilities. There are a number of different things that this money is allocated for that can assist you. However, what happens if you spoke to your lender and they said, okay, we will go ahead and start your process for a modification. Have you applied for the Housing Assistance Fund? And you may say yes, or you may say no. What you don't know, the thing that you have to know is, yes, you can apply for the Housing Assistance Funds, but you can't get both. So if during the process of you applying for the Housing Assistance Funds for mortgage assistance, and they approve you, or they don't, and they approve you at the same time the mortgage company approves you, you can't have both. So that's the time the decision has to be made. Do I go with the modification or do I go with the Housing Assistance Fund? Now, with the Housing Assistance Fund, the advantage is you don't have to pay it back. So what choice would you make? Would you rather have a partial claim if it's an FHA loan with a solid second mortgage, or would you want to pursue the Housing Assistance Funds where they can give you the money and it is a 5-year term, and so each year 20% of that money is reduced off of the balance, and so in 5 years it's zeroed out. You can max out at $50,000. That has nothing to do with seeking assistance for utilities or repairs or other things that when you apply, you tell them what your needs are. You just need to know you're not going to get both. So it's to your advantage to go ahead and apply, because some lenders are slow. They're very slow in trying to get an approval. Now, even though the housing assistance funds are available, the first thing they're going to ask you, did your lender agree to accept the funds? So that was a process. So you have to know when you're talking to your lender, are you approved with the housing assistance funds to accept this money? Because they have to agree. And if they have not agreed, even if you are approved, you're not going to get the funds. 99% of the lenders are working to take those funds from the Housing Assistance Fund. And that's, again, I said, that's with the Georgia Department of Community Affairs. So we talked about quite a few things today. You know, they're your VA loans. They want to make sure that they can keep you in the properties. You have your conventional loans. You have the USDA, the FHA, and then you have your private investors. The most important thing you need to know is never too late. But you have to take the first step. You need to reach out to a housing counseling agency after you've spoken to your lender and then let them advocate on your behalf to save your property. Don't lose your property in foreclosure, and don't you lose that equity that you've already accumulated in your property by not following the process and by being, I would say, a little lax in moving forward. Because once that 30 days is over, what you need to know is they can ask you for documentation. Now, suppose you just started a new job and you're making less than you made before, or you have not been on that job long enough for tenure. Then now you got to produce supporting documents, and it's a process, which is a lot longer than if you had reached out to them within that 30-day prior to the expiration, and they can just offer you something that is available to you. I know we talked about a lot today in terms of what you need to do and how you need to do it. But if there is free service available, and if there are qualified counselors available to help you, you just need to make a phone call, because they're there to help you on your behalf. Don't lose your house to the investors, and don't lose your property. Now, they even have disaster programs available. They have unemployment programs available. But you know what? If you don't ask, you don't receive. And so you've got to be very proactive, and I can't say that enough. You have got to be proactive to save your property. I am so grateful that Henry County wants you to save your property. That's why they take the time to ask me and anyone else to come in to give you pointers on what you need to do. They don't want high vacancies in their communities. You don't want that either. And so if they've taken the time to give you a resource, then you need to take advantage of that resource. So I hope that I've been able to give you some basic information today to help you. My contact number will be on this slide, along with information about, if you don't know who owns your mortgage, the websites that you can go to determine who owns your mortgage. But at the end of the day, save your property. Thank you so much for this opportunity.